Good day, my name is Christel from Klerk, Independent Technical Analyst. The first one on our list this morning is the S&P 500 index in the US. We can see that there is an ugly double top formation that warned and has been confirmed below, and I'm going to give you that exact level now. And a double top, a triple top, and head and shoulder formations are all warning formations, highlighting that the top of this instrument is in place. In other words, you can expect downside and some profit taking. And the double top on the S&P 500 was confirmed when the level of 5,827 changed into a resistance. Only if this index can get above these high resistance levels, waiting at 6,114, can we say that the warning is off the table. So there needs to be quite some buying power to take this index back all the way above that 6,114 level in order to assume that the warning is off the table, that we can see upside. Ladies and gentlemen, this has been a massive rally to the top. If we look back at the history, here in February 2023, a beautiful golden cross formation was confirmed where that shorter 20-week moving average crossed higher through that red line, the 40-week moving average, which was confirmation for medium to long-term investors, because remember, these are weekly graphs, that the bullish trend of the instrument is in place. And boy, they confirmed and lived that bullish trend. It was a little bit of a pullback back in October, since about August 2023, a little bit of a pullback. It only did that for a couple of weeks, kept the 40-week moving average a resistance. Again, buying power, a beautiful good buy is there on a 20-week moving average, confirming optimism. Pulled back, beautiful good buy is on the 20-week moving average, confirming optimism again and again. But here, in the week of the 24th of Feb 2025, that 20-week moving average changed into a resistance, which was the first sign of weakness. The double top was confirmed there below 5,827, and we can see now that the momentum to the bottom is clearly in place. Look at my stochastic, both lines are pointing downwards. So for those who are in profit, should maybe consider taking profit or wait for the first bounce and then take profit in the bounce. It's entirely up to you. Or next time, I pull your graphs a little bit closer to make sure that as soon as the double top is confirmed, you consider taking profit. Now we've got 4 consecutive red lines, red candles, right? So normally, and that is more than a 3 black rows. So what normally happens is the market starts to support, and they feel that, listen, this is maybe a little bit overdone, and they start protecting and buying the instrument again, in this case the S&P 500. So you might see a little bit of a bounce now going forward, and your first sign of strength will be above this week's high, which is waiting at 5,705. Above that level, you can maybe expect a little bit of a relief bounce to higher levels. But ladies and gentlemen, what is very important here is the 20 and 40 week. At some stage, should the downside continue to the bottom, at some stage that 20-week moving average, the green line, will break downwards through the 40-week moving average again, and that will confirm a death cross formation, which again will say and confirm a bearish trend. So be careful, be aware. I've given you the first levels of strength, but we can expect more downside if we look at the current graph as it is. Datatec, listed on our local exchange, ticker DTC. Had a beautiful lamp pole formation to the top, beautiful upside, and now since that week of the 6th of January, the share has consolidated sideways and are starting to make lower highs, right? And that implies loss of momentum and profit taking. My stochastic has already confirmed the negative divergence, with the orange line breaking downwards through the blue line, and look, tested it again and kept it a resistance. So sitting on a 56, the momentum to the bottom is clearly in place. First sign, or my next sign of weakness, will be confirmed below that support in the week of the 24th of Feb. That is waiting at 47 Rand 69. Below that, negativity will be confirmed for more downside. And we can expect the downside to escalate then, right? First sign of strength again will be above that closing price in the week of the 3rd of March, and that is above 49 Rand and 8 cents. Usually after such a lamp pole formation, we can easily get a waterfall formation, right? because it was so optimistic and then so emotional to the downside, right? And then we can see that the profit taking to the downside can escalate. Very important. This makes it very difficult. Why? Because of this lamp ball formation, I still have a golden cross. My bullish trend is still in place. My 20-week moving average is still pointing upwards through the 40-week moving average. So what we can see is a little bit of a pull. If the optimism, and that is, remember, the graphs is nothing other than measuring the psychology, the feeling towards, the sentiment of investors towards the listed instrument. No matter how, and we've said it so many times, beautiful, profitable, cash flush a company might seem on paper, if there's not enough buyers, the share price won't rise. And the same applies to the downside. So should the investors feel that, listen, this is maybe just a small profit taking and then upside, you will see that in the candles or in the support on the line graphs. At the moment, I've given you those levels of support and resistance. But for the medium to longer term, and that I mean by 3-month plus view, the golden cross formation is still in place, confirming a bullish trend. So we might see a small pullback and then some upside again, depending on what the sentiment of investors are. But you can use those levels, 49 Rand and 8 cent, above it more upside, and below 47.69, that resistance, or that support that can become a resistance will then confirm negativity below 47 Rand 69. Pan African Resources, ticker on our exchange PAN. Also a share that confirmed a beautiful golden cross here in the week of the 18th of December 2023, and ever since then just moved from strength to strength. There was a beautiful pullback and then a beautiful technical goodbye kiss on the 20-week moving average, that green line, where it tested it, found enough buyers and bounced above it again for more upside. But ladies and gentlemen, we are sitting now with a possible left shoulder, a head, and a right shoulder. And the negativity of this head and shoulder formation will only be confirmed when that neckline, and I'm going to give you that level, waiting at 8 Rand and 5 cents, changes into a resistance. If that level changes into a resistance, in other words, the share starts to trade below it, we can expect the warning to be on the table, and the full target of that head and shoulder will be the full length of the head of the formation projected downwards from the leg line where it was confirmed, meaning I can see Pan Africa at 6 Rand 22 should the profit taking continue. The warning of the head and shoulder formation will only be off the table when the resistance at 9 Rand and 9 cents starts to change into a support again. So if the share starts to trade above 9 Rand and 9 cents again, I will say, listen, the warning is off the table, obsolete, we can see more upside. My stochastic is in no man's land, sitting on a 42, beautiful positive divergence, but not enough to keep me happy. I would be very careful as well if that 20-week moving average starts to change into a resistance that is waiting at 8 Rand and 49. And very important, look how beautifully it kept it as support for a very long time. So should a moving average, in this case the 20-week, the green line, starts to change into a resistance, it tells you that, listen, the buying power or the selling power is becoming stronger. That was previously buying power. All right, and again, obviously, you know, should my 40-week moving average, the red line, waiting at 775, change into a resistance, the long-term sentiment towards Pan Africa will change to negative. The Rand, very interesting, a golden, some will call it, because it's an inverse graph, right, between the Rand and the dollar. This is seen as a, in theory, a golden cross formation, but actually a death cross. Why? Because in currencies it's the inverse, and that means we can see as long as that 20-week moving average has crossed upwards through my longer 40-week moving average, the red line, that means we can expect a weaker Rand. The Rand is also caught here within a falling wedge formation, and that falling wedge, the negativity around that will be confirmed above 18 Rand 41. Then we can easily see the Rand at 1860 and 1880. Only when the Rand starts to consolidate, I would say, below my 40-week moving average, waiting at 8 Rand and 6 cents, can I expect a stronger rand again? My stochastic is in no man's land, so I'll be guided, by the moving averages and the falling wedge. Below 18 Rand 6, I can expect a stronger rand, taking me back to levels around 1783, 1754, 1736, as well as 17 Rand and 7 cents. Above, I've given you the levels to the top. So keep an eye on this death cross formation. As long as those moving averages point upwards, cross upwards, I expect a weaker rand against the American dollar. Don't forget to send through your request via Twitter or email us at admin@fransdeklerk.com. Have a fantastic week. Take care.